In this video, we're going to be looking at some examples of liquidity and the different types and applying those to the market. So in this first example, we can see that we get this corrective move up here, which creates this trend line liquidity. Price then comes down, sweeping that, and then running up. Okay, then we can then see that we get this demand zone created here. Price creates this low here above it, which acts as inducement. So then we then come down, tapping into that, and then run into the supply. And this high here is very corrective, which is the inducement that's created for this supply. So these are equal highs which act as inducement. So we tap into the supply here. We also then come down into this demand, which has inducement in the form of this low, before running up into this, further into the supply. Price then comes down, we get this supply created here, which has inducement created in the form of these two highs, which we then tap into this supply and then come down. And then we tap into this demand here, but not into the wick. So then price uses this as inducement, tries to push up, comes down sweeping that, and then runs up. And as you can see here, we have this supply. We then come down, create some inducement below that, before sweeping that into here. Coming down again, we're creating this supply. We then get some inducement created in the form of these highs, which then get swept when we tap into the supply. And as you can see, this is a corrective move down. So we've got trend line liquidity created above this high. And we come down here, we've got equal lows here, which get swept before pushing up and then sweeping this trend line liquidity. So if you were to get long from here, you could target this trend line liquidity. Or if you were to get short from here, you could target these equal lows. Got some equal highs here to be aware of. We then come down, we've got equal lows here. I'm not sure why there's two equals there. Equal lows here, which get swept. And then we get this demand created. And then we get some inducement in the form of this low. Price taps into the demand and then runs up. And we can target these equal highs here as our target from this long here. So we come up, we sweep that. We then move correctively, push up, get this supply created, and then we get these equal lows created down here. We sweep those. These equal highs here, they get swept by this wick here before pushing down. And these equal highs are inducement for this supply zone. So we tap into this supply, sweep this this whole high here, which would be inducement for this. Come down, we get this demand created, inducement here, which are equal lows, and then tap in, push up correctively, more trend line liquidity being generated, and then tap into this demand here. We get this low created as well, which is inducement. So as you can see, liquidity is everywhere. So we use it to our advantage by identifying where it is. So we can use it to target, we can use it as inducement for a supply or demand, and trendline liquidity we can use as also a target. So yeah, apply this to your charts and make sure you practice this, practice identifying it and using it in your trading.